A very good morning to you and welcome to Core Finance. I'm Malcolm Graham-Wood and today I'm doing another one of my CEO interviews. And it's great to welcome back into the studio Fiona MacAulay, who is the CEO of Echo Energy PLC. And it doesn't seem like 5 minutes ago that Fiona was sitting here. In fact, it was 5 months ago. The last time you were here, you hadn't even started the job. So I think the first obvious question to say, Fiona, after welcoming you aboard, is to say, what's it been like? Obviously not very busy, fairly quiet. So what's it been like?
Thanks, Malcy, and obviously delighted to be here again with you. And is it really only 5 months? It does seem like a lot longer. Yes, we have been incredibly busy. I took up my position as CEO on the 5th of July, and I think we're now, as you say, five months past that starting date, and we seem to have covered off an awful lot of ground during that 5-month period. I think when I started, I said we were going to be ambitious and bold, and we had a growth strategy, and that's absolutely what we've been doing as a team. We have spent a good deal of time screening both opportunities and areas of focus to really deliver this LatAm exploration-focused gas business and to create ourselves as that small cap leading LatAm player, with still having our ambition to becoming a mid-cap LatAm player within the kind of timeframes that we discussed back in June.
Excellent. We're going to go into bits and bits, the deals and everything else bit by bit, so we can sort of dig deeper into those things. The biggest deal has obviously been in Argentina. I've written quite a lot about Argentina in the last few months for all sorts of reasons. But what I'd like to ask you, your view. You've obviously done it for a good reason. I'd love to know what you see in Argentina from the top down, as much as anything else.
Yeah, I mean, part of that screening process was very much about which country entries that we wanted to focus upon. And for us, Argentina has really been a primary geography. I mean, we're seeing Argentina being open for business, and that's an important facet for us. There's been about $9 billion invested in the upstream part of the business over the last 3 years, most of that by international oil companies, large-scale multinationals, which gives us that stabilisation of that whole sector of the market. We, however, will be one of the first smaller companies coming in under that umbrella with that security net behind us. And we'd like to think ourselves as a first mover to actually be able to come in, to benefit from that opening economy. For us, the imbalance of supply and demand in the Argentinian gas market is key. And alongside the access to existing underutilised infrastructure, strong gas pricing, strong contracts has been a real determiner in us choosing that as a primary focus for geography.
Excellent. So why don't you talk me through the deal that you've done in a bit more detail?
So we have entered into a farm-in with a company that most people, I would imagine, have never heard of.
Yeah, it was going to be my first question.
Yeah. So CGC are the energy division of a much larger conglomerate called Corporación América. It's one of the largest conglomerates in Argentina. Their turnover is something like 1.4 billion on an annual basis. They are a company that most people would never have heard of, but are indeed the 7th largest airport operator in the world, for example. The energy part of that business is about 20% of the overall company, and of that, upstream forms a part. They also have transmission pipeline networks, renewable industry, and are just embarking on an LNG regasification project. So it's the kind of large company that on the ground has those great strategic networks, both at governmental level, federal government and provincial government, great stakeholder relationships, a good HSE track record, excellent labour track record, and so that gives us one of the key parts of our business model, which is a strategic partnership with a strong company on the ground that is going to enable us to come into a country as a new entrant with that framework around us.
Yeah. Now, when you sat in this chair before, I seem to remember when ECHO was set up, it was going to be very much exploration-led. Looking at the deal from my side of it, you seem to have got exploration, appraisal, and production. In other words, almost a full cycle E&P company, up and running straight away. Has anything changed, or was it just a deal that came with everything? And
I think having this diversity of risk is key for us. It is, as you say, full cycle in one step, and I think that's a terrific achievement. We have absolutely got the scale of exploration here that we would have focused on, and underpinning that, we've got some immediate production, some reserves and resources, some much lower risk exploration, and then we get onto the frontier scale type of exploration risk that perhaps we would have been thought of as that being our primary target. But in fact, this diversity across the risk profile, across the cost profile, I think has been a tremendous achievement for us to get in a single deal.
Right. Well, you touched on two things, which is going to be the next question anyway: production and reserves, and obviously potential upside. So why don't you tell us what the production is and what the reserves are, and what you're heading for?
So just to put this transaction into a scale sense, the area that these licences encompass is about 11,500 square kilometres. So that's the size of Qatar or twice the size of Trinidad. So within that, we put this diverse portfolio. In terms of production, on an immediate basis, ECHO, as a net position, will be having around about 1,000 barrels of oil equivalent production, and that's made up 1/3 in oil, 2/3 in gas. So very much a gas-driven profile. In terms of our reserves and resources, we're looking at having acquired 7 million barrels of oil equivalent. And in terms of prospective upside, in an aggregated way, we have up to 25 TCF of gas across the portfolio. Upside case, gross gas in place. Now, important to us as part of this transaction, and to ensure that we had that validity sitting behind us, we brought in Gaffney Klein and Associates to prepare our competent persons report. As you will know, Malcy, GCA are very much top of the tree when it comes to being CPR providers. So to actually be able to have a GCA certified competent persons report, which has this scale of opportunity within the portfolio, really has been a tremendous tick in the box for us.
Great. Now, again, sort of coming on from that, and you mentioned it before, the infrastructure in Argentina, as you say, because of CGC and so on, is all very much in place. So infrastructure and eventual gas markets.
Absolutely. So we're talking about a portfolio that sits down in the Austral Basin. That's way down in the southern portion of Argentina, further south, for example, than the Vaca Muerta. Within that basin, there is an existing underutilised series of infrastructure. That's both gas and oil pipelines, and in fact we have a fiscal metering station sitting right within one of the main blocks that we will be acquiring as part of this transaction. The pipeline from there, the San Martin pipeline, leads directly to Buenos Aires and to a number of other industrial hubs en route. So currently the infrastructure actually on block where we have the current production is sitting at about 10% utilisation. So you can imagine that every extra barrel we put into that facility, every extra scuff of gas that we put into that facility benefits from the fact that the fixed costs are already covered by the existing production, and therefore it intrinsically has very high value. We don't have a worry about us not being able to sell either the oil or the gas. As we put that gas into the pipeline, it is sold to an end user, and there's a variety of contracts that one can enter into. CGC actually has a department that all they do is gas trading, so we can put all of those gas contracts together and get ourselves a very strong pricing, which I think is really important to this deal. When we look at the basin as a whole, I think it is important to note that this basin is an existing gas basin that has had production since the early 1900s actually, and currently produces around about 22.5% of Argentina's total gas on a daily basis. So having this well-matured basin on which we can now place high impact exploration is key for us.
Sounds good. Now, what I'd like to go to from here is sort of news flow, in the sense that, you know, I've heard the expression from you guys a lot that you're hitting the ground running, which I know you have done. And the other expression in reading through your presentation is multiple wells all drill ready. So starting in the beginning of next year, which is only a month away, I assume that there's a lot of drilling of wells, or bit by bit, one at a time. But tell us about that. And also, you seem to have a huge seismic reprocessing program. So talk us through the news flow and what we might expect.
Yes, I think anyone who's invested in Echo will be very happy with the intended path of news flow over the next 12 to 18 months. You're absolutely right on one part of the acreage where we have the existing production and some existing 2D and 3D seismic. We have 7 drill-ready prospects. Already matured, not permitted. The permitting process needs to begin in early January, but the permitting process actually in this basin, importantly, is incredibly well understood. There is a time frame that one goes through, and
presumably CGC have a
permitting department. So in the course of that first year, we would be expecting to see between 4 and 5 exploration wells drilled, some into already existing contingent resources, some relatively low-risk exploration wells. In addition to that, we have workovers planned on at least 3 existing gas wells in part of the prospect, and that will all be tailored towards coming to an investment decision on putting in a small additional chunk of pipeline to enable us to produce gas of some already discovered gas prospects that sit within the inventory. Alongside that, we will be looking to reprocess existing seismic en bloc, and there's a good rationale for that. Many of the prospects in this basin have been drilled off 2D and very early 3D in the past. When we look at adjacent license areas where 3D has been reprocessed and looking for AVO anomalies, for example, that the chance of success on those wells has been vastly improved. I think on the block immediately next door, they've got something like an 8 out of 10 hit rate using those more advanced processes of looking at the seismic. So we've got drill ready prospects. We've got 7 of those. 4 we would expect to drill within the next year. Each of those, if one looks at the value proposition from the Gaffney-Klein report on an unrisked basis, could be either targeting a value of about between $15 and $60 million. So you know, these are all low cost, and by low cost I mean on a dry hole basis these wells come in at less than $2 million. They're rapidly drilled. They're drilled within a 2 to 3 week period, but they can deliver us values that are actually really meaningful and material.
Yeah, I mean you ideally perfectly come into my next question. I'm going to ask about cost of the rigs, availability in country. I presume CGC have a rig department, so there's no problem on rigs. We know that the area is sparsely populated with so little problem on that front, and the seismic reprocessing will be done there or in Buenos Aires or in London, or
so as you'll know from our recent experience in terms of going out to tender on our Bolivian seismic, actually there are a multitude of companies that bid very competitively on that reprocessing, and we will do that same market exercise for the seismic that exists across the acreage here. Seismic reprocessing has really come down in cost, as we know, over the last few years, and that, as much as anything, is to do with the availability of CPU space, computing space. So yes, that will be something that we organise. I think one of the points that may not have come across is on the ground, CGC absolutely will be the operator. They'll be the people controlling the rig and the operations. But actually, when it comes to the subsurface part, it's a part of this deal. Actually, the deal enables Echo to be the technical operator over the CDL licenses.
Area, isn't
it? Absolutely our specialist area.
Yeah.
And that's great in two senses. One, it allows us to bring in maybe different players in terms of the seismic reprocessing part of the angle, but also it enables us to just put a slightly different angle on the way in which we look at the portfolio as a whole. It enables us to drive the pace and the spend within the licenses. But on the ground, absolutely, CGC are best placed to be the people who are looking to have the operational side of that and the permitting side. So yes, currently they have one rig which is on pretty much permanent contract. Part of this process will ensure that we go out to competitive tender again. We know that there are a number of other service companies that would like to participate in that tendering process. So absolutely, we'll be looking to ensure that we have that competitive part of the process. I think you mentioned the area is sparsely populated. That is important. There's a total of 300,000 people who live in the Austral Basin. Most of those live in the hub of the service sector, which is Rio Gallegos, and another portion live in one other town there. And that's critical, actually, because one thing that we don't see in this basin is any issues with indigenous population. Very sparsely populated. But actually, you know, for a change, normally when we have this scale of upside, it would be in a pretty harsh, unpleasant environment. But here we're talking about
doesn't look too bad to me.
Relatively flat, well drained, no issues. Bit chilly in the winter, but certainly not inoperable in the winter.
Excellent. I want a quick word on the finance, how you structured the deal, actually, because it looked to me quite smart. Because as I said, it's a bigger deal in a way than I was expecting. But you didn't pay very much up front, and so I'm assuming therefore that you've got, because you're drilling 8 wells and doing a lot of seismic reprocessing, you've got a sort of ongoing commitment to pay for it like that. Is that right?
That's absolutely right. And you know, for us, activity is key, because actually what we want to do is not only boost the production. We're currently at about 1,000 barrels of oil equivalent, as I said, net to Echo. We would look to be boosting that fourfold over the next 12 to 18 months through the drilling programme that we have envisaged. So actually this is all about putting cash into the ground. It's about making sure that we have the opportunity to build that production base, to build the outlying resource base alongside that. So the deal we structured was actually to give a very small amount of cash up front. It was about $2.5 million, and the rest of the consideration actually goes into this exploration programme. So for the exploration programme, we will be carrying CGC, and I think an important note, however, is that it is purely on the exploration capex. So we're not talking about carrying them on OPEX, we're not talking about carrying them on G&A, and the moment we have a future discovery, of which we're very confident, then any costs that are associated with the development of that discovery are also split on a 50-50 basis. So yes, we feel it's an ideal way in which to structure the deal for a company such as ourselves to maintain as much cash within the company that we can move forward with in terms of ensuring that the exploration programme goes ahead and that we accelerate that production or increase in production.
Excellent. That sounds just how I thought it would, but I need confirmation. We're beginning to run out of time, so I want to have a quick word about Bolivia, if I may, because we mustn't forget that was your first deal, and it's been rather lost in the process of Argentina. Give us a quick.
So things are going very well on Bolivia. We are coming towards the close of the first phase of the reprocessing. We're getting some pretty good feedback on that. That's with the technical team as we speak at the moment. And once we've got those final results in terms of how is the workflow on the reprocessing going, we'll be able to move it into this depth conversion phase. As you know, we've got somebody on the ground now, our country manager, Andres Brockman, who's driving forward, looking at other opportunities in the country, and clearly we've had a lot of support from the government and the regulatory bodies there to open up their doors to us to look at other opportunities as they stand at the moment. But things are looking nice on Huaco, very nice, and we'll be progressing that along schedule in early 2018.
And can I assume you're still, despite hardly having anything else to do, you're still looking at other potential deals, or?
Malcy, what would you imagine? Of course, we are absolutely looking for other deals, but I would really like to reiterate that the upside potential that we have in the exploration block in Argentina, and having an upside case of just under 23 TCF of gas in place on that block alone, it is something that we're going to be focusing a lot of our sights on over 2018.
I thought you might say that. And I looked back last night at the interview from June, and one of the things you said that was the 3 Ps: the people, the partnership, and the portfolio. It's been pretty clear in this interview that you seem to be, well, you've kept a bit quiet on the people because you haven't had a chance, but people, you've got a partnership in both countries, and you've got portfolio now, so presumably you're happy that those boxes are ticked.
Absolutely. I think when we spoke last, we were talking about coming back in 6 months and hoping to have ticked all of those. I don't think we could have asked for 2 better strategic partnerships than CGC and Plus Petrol. Absolutely the right companies to be helping us drive this forward. Our people part, we're very much working on. We're building that team, and clearly there's going to be a little more team building going on over the next couple of months after we complete this transaction. And portfolio, well, I'm delighted.
Yeah. Good stuff. We've run out of time almost, and so 1 or 2 questions will remain unanswered or unasked probably. But I always have to say, you've had an incredible first 5 months. If you sit back here at Christmas next year, what would you be saying? What's your idea, your vision for Echo in the next 12 months?
Well, my vision for Echo is that we really build up that production side of the portfolio that we've discussed. I would really be like to have a well either drilled or in progress on the big exploration upside a block, and I'd like to see my portfolio having increased somewhat.
Well, sounds absolutely perfect. Fiona, thank you very much for coming in again to Core Finance. Thank you very much for watching us. That's Core Finance CEO interview for today. Thank you very much, Fiona, and see you next time. Bye-bye.